Telus is still down about 4.5% from their February highs, but since March lows, they have continued to climb at a gradual rate. Looking at the 5-year chart, Telus is up 40%, providing some nice returns to their shareholders. Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex, and today we're looking at one of the big 3 telecommunications companies in Canada, Telus. Telus trades on both Canadian and US exchanges under ticker symbol T or ticker symbol TU. They currently pay a dividend yield of 4.73%, which comes to $1.24 Canadian annually. In this video, we're going to explore everything from what the business does, their valuation, and even the dividend. So stay tuned and let's get into it. Alright, so I bet you were not expecting that, but there I am in the flesh. First time in front of the camera, so cut me some slack and hit that like button. And don't forget to remind me that I recorded that on a potato known as my 2011 MacBook. Moving on, here we're looking at the stock quote for Telus. All figures on here are in Canadian dollars. Today they closed at $26.31, up 1 cent on the day or 0.04%. They're a large company with a market cap of $33.94 billion, and they're currently trading at a PE ratio of 25.35 in the trailing 12 months. Their earnings per share in the same period was $1.04, and in the last year they've traded anywhere between $18.55 and $27.74. They're currently paying a dividend of $1.24, which equates to a very attractive 4.73%. So moving on to what Telus does as a company, they do have their big 3 services, internet, mobile, and home phone. And these are the main things that we expect our telecommunication companies to be doing. So I will touch on these briefly and give a quick update on what's going on in these segments of the business. But the main thing I want to talk about today is the next 4 segments of their business, in which I think we will see some very interesting things happen for Telus in the coming years. So the company can be split into 2 sectors, the wireline sector, which looks at fiber optic and internet, cable TV and satellite, and landline phones. And then they also have their wireless, which focuses on mobile devices and 5G. The easiest way to remember this is wireline services uses cables or data lines to connect to a service, whereas wireless services don't use cables, hence why they're wireless. Having a look at the revenues and how this is split, wireless made up about 52% of Telus's Q3 earnings, whereas wireline makes up 48%. A message from their CEO in their third quarter report reads, "In the quarter, we added 285,000 new wireless, internet, TV, and security customers, up 27,000 over the same quarter a year ago. Residential voice, or in other words, home phones, which are predominantly owned by dinosaurs and other prehistoric creatures, continued to see losses of only 8,000, which did improve by 4,000 over the same period a year ago, which we would expect to see as people continue to remove these devices from their homes. The total wireless subscriber base is now 10.6 million, which is up 4.9% over the last 12 months. And it's also good to see growth in their wireline sector, with internet connections up 7.2%, TV subscribers is up 4.4%, and the security customer base has continued to expand as well. This sophisticated bar graph down the bottom shows the total customer connections dating back to Q1 2018. What we're seeing here is steady growth and that their Q3 numbers are the highest they've ever been. Alright, so now on to the fun stuff. First up is the entertainment sector of the business. Now, one thing I would like to mention here is how Telus has made the decision to focus less on media, in which Bell and Rogers have been pursuing heavily. The space is already very crowded, and we've continued to see more players enter the market every year. Now, as most of you will know, Telus's big competitors are Rogers and Bell. And you may or may not know that Crave is actually Bell's video streaming service. They're not the only one dibbling and dabbling in this market. We also have Shomi, which was a joint venture between Rogers and Shaw for their video on demand service, which was founded in 2014. However, this tenure came to a very abrupt ending just 2 years later when the company was dissolved, which is just another way of saying they quit and sold all their assets. And looking here at an article from 2016 talking about the closure of the business, David, the Senior Vice President and General Manager for Shomi, said the business climate and online video marketplace have changed markedly in the last few years. Combined with the fact that the business is more challenging to operate than we expected, we've decided to wind down our operations. And then he goes on to toot his own horn despite the miserable failure, stating he remains proud of the service it launched and the role it played in the evolving video landscape in Canada. However, Crave still exists, so you're probably thinking, show me how that's going. So taking a look at some of the recent figures from Crave, back in 2015, they had 727 subscribers, and then they reached over 1 million at the end of 2016 when Xiaomi shut down. With that closure, Bell likely expected many of those subscribers to jump across to Crave, and it's likely that all three of them did. However, over the next year, they only added another 300,000 subscribers, and fast forward 3 years, they're at 2.8 million. What I would like to point out here is over the last year and a half, they've really struggled to add more subscribers, and they've been sitting around the 2.7 to 2.8 million mark for the last 18 months. So this does really give you an idea on how difficult this market is, and as we saw before with the many options available to consumers, you really need to be offering some of the best content at the best deals to continue to grow your subscriber base. And this is why I like Telus's approach of Optic TV and Pick TV. So Optic TV is a box that you can rent or purchase, and it lets you watch and record shows while also having access to a range of apps such as Netflix, Crave, Amazon Prime, etc. So Optic TV gives you a large selection of channels, and additionally you have the ability to restart live shows up to 30 hours after they've played. So I like that, but what I like even more is over here, Pick TV, and it says on Apple TV. However, Pick TV is an app, and you can download this on any TV or device. So obviously there's no installation needed, and you just choose the channels you want, hence Pick TV. So here are some of the channels they offer. You can get the sports pack, you can get the Crave and Movie plus HBO, the Food Network, the History Television, CNN. So you really get to pick what kind of content you enjoy and purchase just that. Now the reason I like this move from Telus is instead of focusing on creating content, which is extremely difficult, or leasing content, which is extremely expensive, they choose to be the gateway to many of these services that they already know are successful and that people are buying up anyway. And they just offer these services individually or even as add-ons to your home internet plan, which essentially means that they're still profiting from this market. However, they're investing a whole lot less money, time, and resources into the sector that we already know is very difficult to succeed in. Next up, we have Telus International, and they provide multilingual customer service outsourcing and digital IT services to clients throughout the globe. Their clients mainly include corporations in fast-growing industries such as technology, travel and hospitality, financial and fintech, games, telecommunication, and healthcare industries. Their services and solutions cover things such as customer service, digital transformation, omni-channel solutions, digital consulting, risk management, and back-office support. I view Telus International as a segment of the business that focuses on advising other businesses and help them improve in the ever-changing digital world. As we can see here, they offer many solutions, and as internet services become increasingly more essential for the long-term profitability of a company, Telus International is offering a one-stop shop to help companies get where they need to be in this new world. As they're already working with some of the largest companies in the fastest growing industries such as Cisco, Salesforce, and Google Cloud, it's clear that companies are seeing the value in partnering with Telus International to help grow their business. The next segment is Telus Health, and this is probably my favorite and most exciting. Telus Health is Canada's largest healthcare IT provider, and they connect patients with physicians through their mobile apps such as Akira by Telus Health and Babylon by Telus Health, both which allow access to secure virtual consultations with doctors. Currently, they have 94,000 pharmacists and healthcare professionals connected to the Telus Health ecosystem. As many of you know, the telemedicine industry is huge and it's growing at a very rapid pace. In 2019, the global telemedicine market size was estimated at US $41.4 billion and is expected to grow by 15% over the next 7 years. Telus Health is in a position to improve many of these different factors and should have an overall positive impact on the healthcare sector. What's important here is they're not only focused on the consumers, they're focused on how they can improve programs and services for the medical professionals that use them. As the largest player in this space for the Canadian market, I expect Telus Health to grow significantly over the next few years. Finally, the security sector. Now, this is not a very large part of Telus at the moment, but I do see it growing in the future. Their security business has two focuses: smart home, which has alarm systems, home monitoring, and smart plugs, and digital security that focuses on identity theft protection and device security. Now, this is Telus just continuing to evolve with technology, having everything from smart locks, smart thermostats, smart lights, smoke sensors, outdoor security cameras, doorbell cameras, and essentially continuing to integrate your home with technology. They then link all of these services to a single app, and on the security side, if a sensor is triggered, you get an alert on your device and then you can choose how to respond. So smart home is pretty cool and quite futuristic. However, I do love the focus on digital security. Their digital security services focuses mainly on identity theft protection, in which if you were to become a victim of identity theft, which is growing in popularity, you will be assigned a specialist that will work your case from start to finish and help restore your identity. Their other services include device security, which protects you from viruses. They also have a password manager that helps you securely manage your passwords. And they also have a safe cam service which helps protect your webcam from it being turned on or used when you don't want it to be. They have a range of different packages that go from $6 to $30 a month. And if you were to go for something like the ultimate package, you would have everything from Norton 360, device security on up to 20 devices, dark web monitoring, identity theft coverage up to $1 million, on-demand credit reports and credit scores, and you will also receive bank and credit activity alerts to make you aware if anything fishy is happening. Global Market Insights, a renowned market analysis company, estimate the personal identity management market, or for short PIM, was around $6.5 billion in 2015 and is expected to grow at a compounded annual growth rate of 20% to reach about $34 billion by 2024. Obviously, with the growing concerns for digital data security of personal and professional significance is expected to be the key factor driving the growth. So with the need for digital security growing significantly in the coming years, I think this sector will perform very strongly for Telus. Now, I know the business overview for Telus took a little bit longer than it usually does. However, there are many sectors of this company, and I think it was important to focus on the four that I think will see significant growth in the coming years to give you an idea of why I'm incredibly bullish on Telus to become the leading telecommunications company in Canada. Moving on to the dividend growth and history. As seen in this graph here, Telus has continued to grow their dividend over the last 10 years, as they were previously paying a 47.5-cent dividend, which equated to 5.2% of the stock price at that time, whereas they are now at $1.24 Canadian, which equates to the 4.73% we see today. Next up is the share price versus fair value. Simply Wall Street, which is a great tool for all investors, offers an estimated fair value based on the cash flows the company is expected to generate in the future. Their fair value estimate for Telus is $50.34, which means the company is 47.8% undervalued based on this metric. As always, we like to look at the price to book ratio, in which companies that are below 1 could be potentially viewed as undervalued, whereas those with a higher price to book ratio may be trading at a premium. So taking a look at Telus, they are trading at a 2.7 price to book ratio, which does seem a little bit high, but this is why we take a look at their competitors to get a better understanding of where Telus is being valued. So if we have a look at Bell, they're trading at a 3 price to book ratio, and Rogers is trading at a 3.1 price to book ratio. So based on this metric here, it does appear that Telus is trading at a lower valuation than its two biggest rivals. It's always important to look at the recent insider trading because those that are on the inside that are working in the company day by day have a much better idea of what's going on within the company. What we're seeing here is a little bit of mixed buying and selling from the insiders. We have a couple of notable figures in the company, including Naveen Arora, who is the president of Telus Business Solutions, and he purchased just short of 20,000 shares at $25.44, which came to just shy of $500,000 Canadian dollars. We also have Doug French, who is an executive vice president and chief financial officer, and he did sell during May and August, coming to just shy of 200,000 Canadian dollars. Now, although we have seen a few recent sells, what I am seeing is the big dollars are coming in as purchases, so I don't really see any problem with this. The last thing I want to discuss today is Big Man Darren. He is the president and CEO of Telus and has been for quite some time. Darren joined Telus as the president and CEO back in 2000, meaning he has now served over 20 years with the company. Throughout his time there, Telus has returned 549%, which is number one in the world amongst telecom incumbent peers. With his leadership, Telus has quadrupled their enterprise value to approximately $51 billion, and earnings per share has grown by threefold to $2.89. I think Darren is not only a great president and CEO, but an overall good person. During the peak of the 2020 pandemic, he did not accept his salary for 3 months and instead donated that to those most in need and affected by the situation. I think that the culture that Darren has built at Telus not only focuses on the returns of the shareholders, but also ensuring the community that Telus operates is benefiting too. I think that the focus and importance on the greater community will in turn have an effect on their customer base and how those that have been somehow helped by the company view the company. I think Darren will continue to lead this company in the right direction, and in turn that will reward the shareholders for trusting in him. So I'm interested to hear, do you own Telus? Is it one of those companies that you've been eyeing? Maybe you own one of their competitors in Bell and Rogers, or even one of the smaller dogs like Shaw Communications. In my honest opinion, I don't think you can go wrong with either of the big three, but I am most bullish on Telus. I really believe in the management team and what they're looking to do, the way their business segments are set out, and how they're continuing to grow. And this is why I myself am an investor in Telus. Now, despite my bullish thesis here, remember that I am not a financial advisor, and ensure to do all your own research before investing in any of the companies that I discuss. Alright, so that's all for today. Thanks for watching. Remember to like, comment, and subscribe to see videos similar to this one.